Hey, if you wanted to know all things HousingWire, mortgage, real estate, fintech, and hang out with one of the coolest guys in the entire industry for mortgage professionals, you're listening to the right episode of the Loan Officer Leadership Podcast. I'm your host, Steve Kiles. And today, my guest is none other than Clayton Collins. What's up, my brother?
Steve, it is wonderful to see you. It is great to be on your podcast today.
Man, I'm thrilled to be here. We just literally jumped on a few minutes in the green room, and it's like, man, where you been? It's like, not only are you all over the industry, but I'm like, you and I have not had much face-to-face time lately. And it's so
like
cool.
We're both like running fast
yes.
in our own lanes. It's
yes.
There's so many people in this industry that I admire their work. I admire what they're building in their personal lives. I admire their values. And ultimately, for a lot of us who are running busy home lives, busy businesses, and have a value system that keeps us busy, means that we don't have a lot of time just to sit around in the room and shoot the shit.
Well, and it's so funny. You guys did a deal. You were promoting, and I want everybody, our listeners, to hear how life really moves. And you're 100% right. You start running, and then you look to the side, and you're like, oh man! But you guys did an article the other day of some of the top podcasts, and you promoted actually 3 of our podcasts, the Marketing Animals. It was Carl's and mine, and then Mike and Erica's. And it was funny. I had my 10-year-old. We both have 3 kids. Their age ranges are all the same. Mine's 10, 7, 5 years is. What was it?
6, 3, and 1.
I know. So it's like the same ranges. And I had Ethan. I said, Ethan, look, come look at this. This is how life and relationships work. And I just sent you a note saying, bro, thank you for HousingWire promoting our podcast so that we can continue to be a voice to the industry. And then a few days later, we're on a podcast. But it's, I just believe that life moves at the speed of relationships. And so, Clayton, I want our listeners to know that I'm grateful for your relationship, grateful for what you do in our industry. And then y'all have a big event coming up, which you're going to talk about shortly, because I wanted our listeners to know HousingWire's annual 2022 event with a theme called All Things Housing. And it's coming up shortly, October 3rd through 5th. If you're listening to this and it's past that date, go to housingwire.com and look at the next event, because Clayton and his team really are thought leaders when it comes to getting the right message, the right news about mortgage, real estate, and fintech. And so I wanted to bring one of the coolest guys on, spend about 15, 20 minutes talking about what you want to talk about, but also, man, there's a lot of shift in the industry. Talk about that. And so let's go, man. We got about 15, 20 minutes, man. Tell me what you're thinking.
Well, first, on that podcast article, got to give props to Jessica Davis, our writer, who pulled together the list. And one gentleman who I really respect gave me some grief on LinkedIn. He's like, 21 podcasts, like, can you narrow it down? I was like, no, you can't, because each of these shows is bringing something different to the industry. And I looked at Loan Officer Leadership Podcast, and I looked at Phil Treadwell's Mortgage Marketing Expert Podcast, and see very tactical content strategies that are helping loan originators and folks across the housing ecosystem build the systems, processes, and tactics to be more successful and increase their own livelihood and the businesses that they're building, either as originators or teams or mortgage banking leaders. And then there's other podcasts like the show I host, Housing News, which is we just interview C-suite executives across the housing industry and tie out what's happening in the news to how they're making strategic decisions. It's not tactical. We're not trying to say, hey, this is how you should do it, but we're showing you how some really successful people who built the biggest mortgage banks and real estate brokerages and fintechs in the country are building their businesses, which should influence the way you think about the market. So I think there's every podcast host, and there's certainly a lot more right now than there were 5 years ago, is bringing a different value to the industry. And it doesn't mean you should fill your feed with 21 different podcasts you listen to every week, but it does mean you should think about what you need. Do you need to understand what's happening in the market? Do you need a boost in your mindset? Do you need tactics on how to be more effective? And then go seek that content.
Dude, that's great. I love it. Hey, so what are you thinking? Like you're sitting here, we're at where we're at in this phase of the industry this year. What are some of the things that you're thinking about? You're thinking about in the mortgage space?
Yeah. So, I mean, I'll tell you how I think as an operator, and I'm not a mortgage lender, but I do operate a media company that sits right with you here in this industry in the mortgage and real estate sector. And I have to wake up every morning and know that my brain is running at two speeds and focused on two things. There's the horizon. It's what I'm building to and what I believe will happen in the next 12, 24, and 60 months. And then there's the market that I have to deal with today. And this market is significantly tougher than what we've experienced over the last few years for a lot of different reasons. I've kind of thought of my business as, hey, the last 2 years we've run with a 70-mile-an-hour tailwind, and now we're running into a 70-mile-an-hour headwind. And I'm growing in both of these markets. I just have to work a lot harder right now than I did 12 months ago. And I refuse not to grow. I refuse not to give my team and our clients and our audience members the opportunity to grow. And so we'll just work harder and grow into this cycle. And I know that will position us in a better spot as we keep our eyes on the horizon. So
I love it. Hey, well, what do you see? So next 12 months, and I love the two perspectives, because it really is, you've got to be thinking about where we're going, but then what are we doing today? Like on the tactical side for our listeners, here's one thing we continue to talk about is this is a work year. And in that work year, for a tacticianer, a loan officer who says, I've got to make it and not only make it, but thrive in today's environment, it's you prospect your way out. If you are a branch manager, you hire the right people to help you lead this team out of it. And so it's not necessarily am I doing it? It's am I whoing it with the right people to get me through these next 3 to 5 months? And so as you're looking at you're seeing the news, you're not only seeing it, you're aggregating it and helping us consume what's necessary to be looking at the horizon. What do you see? Talk about the horizon. And then I want to go deeper into your current today. Like, what am I doing today? You said work harder. I want to know what that looks like. So what's the horizon?
Yeah. So the horizon is where my head is right now is triangulating data points from different influential sources, and also trying to take a mindset that's educated by history and thinking about the relationship between the housing market and the general economy. And the cycle that we are in right now, it really feels like the housing market and the housing recession that I believe we are in right now is a leading indicator on the broader economy. And while Logan Motoshami, our lead analyst, has been pounding the table for months that we are in a housing recession. We're not preparing for one. We are in a housing recession, but we might be at the precipice, the very beginning of a broader economic recession. And I think that's a really important differentiator, because as you think about one of the hardest dynamics that we deal with right now is the rapid increase in mortgage rates. This has been driven by the rapid increase of the rates by the Federal Reserve. You have to think about how Jerome Powell is pounding the table in relation to the broader economy and what's happening in the housing market. So so last week, when the Fed announced again in September, they'd raise rates by 75 basis points, Powell said, quote, "Builders are having a hard time finding lots, workers, and materials." Today, Rick Palacios from John Burns Research, who I respect a lot, released the latest John Burns report that builders are actually giving up lots, and they have more than they know what to do with. So Jerome's statement that that builders can't find lots is lagging. So I believe that the Fed is still pounding the table on lagging data, where what's happening in the market, at least in the housing market, is a couple steps ahead of that. And so we have to triangulate how long the Fed will pound the table on lagging data. And if their stance that in October they'll increase again, in November they'll increase again, in December they'll increase again, will soften into a more dovish tone as their viewpoint on what's happening in housing starts to catch up with a little more real-time data. That doesn't mean we won't face a longer term economic downturn across other sectors, but housing might be, man, I hope I'm right on this, a leading indicator into an economic recession, but also a leading sector in exiting an economic recession. Because if the country starts to see a ramp in unemployment and starts to see some bigger GDP hits and starts to hit some of the other indicators of economic recession, then the Fed has to soften the stance on interest rates. And we have an opportunity to go back into a more normalized interest rate environment that will help our housing economy keep up with the demographic wave that we know we have and the demand wave that we know is there, which is being negatively impacted by interest rates that are navigating their way through the sixes, potentially into the sevens, if the Fed keeps this hawkish tone.
Hey, and so Clayton, there's two things I want to address there, just talk through. So you're talking about the demand. Is that the nearly 40 million millennials? I think I saw a report, 45 million millennials that are moving into that home buying age. So they're putting a demand on the market. However, they're being priced out because of rates and home prices. Is that what you're talking about?
That's exactly
like
what I'm
that
talking
demand
about.
that's there, but it's pent up because of what's happening currently in the market.
Absolutely. It's pent up demand, and it's demand that's being pent up further by fear, because people are, I mean, fear and like some founded and some unfounded, right?
Sure.
Like there are first time home buyers who are ready for household formation, but their dream home is now 50% more expensive than it was 2 years ago. And their interest rate has also doubled. So affordability isn't there. The house that the monthly payment that they could have afforded 2 years ago has severely cut into purchasing power.
100%.
And that's a real dynamic. That's a dynamic you can't navigate or talk your way around. It only changes with changes in interest rates or changes in home prices. But with the amount of housing wealth that Americans are sitting on right now, and the demographic trends of like older millennials who aren't going anywhere because they locked in 3% mortgage rates, the mortgage rate lockdown theory that Logan has also talked about, means that we're not going to see a flood of inventory to the market. And while we may have seen inventory bump up 25, 30% over the last couple of months on a national level, it's still at historical lows when you start to look back over what's happened in the inventory landscape over the last 15 years. So I'm pounding into some data that Logan and our other journalists understand way better than I do, that they spend all their day into it. But I think it's really important. And this is, as I think about what we talked about on our executive team call this morning, what I talk about with my peers in the industry, is that you got to understand the data to understand your business. And we think about data in a couple of ways. We think about it as industry data, the economic indicators that I just spoke to, and how those are impacting the products that we all have to sell and the pricing of those products. And we also have to think about the data that we take into account in running our own businesses. I had a call this week with someone who did not understand the difference between, like, from a marketing perspective, their CPMs, their cost of conversion, and their cost per lead. And like, I'm like, you got to understand the difference of those, or you can't run a business that has a growth mindset. And that's my marketing angle, but everybody has like their conversion metrics that matter. They know the number of realtors they need to talk to lead to a certain number of referrals. And like, if you don't know those numbers, there's just no way you can manage your activity as a professional and lead to a place where you come out of a down cycle in a stronger place.
Hey, well, it's so powerful what you're saying, because it goes back, I'd say the majority of our listeners, probably 85% of them are the loan officer, and probably 15, 20% are the producing or non-producing branch manager. And what I love what Clayton's talking about here is that there's two, and Clayton, this is the thing we have to fight through, is you'll hear literally two camps of originators at the very street level that say the sky's falling, I've lost everything, I may have to go get another job. And then you got guys like Skylar Wallace that we had on the podcast literally 4 episodes ago, who closed 68 loans last month and will close north of 60 loans this month. Part of our Freedom Club, one of our members, did an average of 39 units a month last year and is averaging over 60 units a month this year. When the market's down 50%, he's grown nearly 50%, 20 more units on top of what he had a month. And so I think what we have to do, and that's what I love about Clayton, is you got to be able to consume the content, but not through a lens of fear, but a lens of education, so that we can prepare for what it is we got to do to accomplish either the same or better results than we had last year. And without the data, like, it's what feeds, okay, hey, if I'm making 30 outbound calls on Monday for my Thor's Hammer, which Clayton, that's one of our tactics. We have a daily success plan of what you're going to do. Yep. I may need to bump that up to 40 or 50 or 60 outbound calls to get, instead of 13 talk tos, now 26 talk tos a day. I'm having to double my activity because I recognize the pace and the change of the market is going to dictate it. This year's a work year, and we can't do what we did to get what we got. We've got to pivot based on the current data that's coming in so that we're able to not go backwards in our businesses. And I love it, but I want to encourage our listeners, you don't listen from a point or a position of fear or a stance of fear, but an awareness of. Talk about that.
Yeah. I mean, that's like comes down to some of our our content theories and content strategy at HousingWire is we've never seen our job as to tell you what to do with the information. We tell you the information because we know our audience are smart professionals who can interpret, internalize, and then use that to run their businesses. So we're not here to say, like, we're not ever going to write an article that goes into that hammer theory and says like, hey, last year you were talking to 20 people a day. Now you need to talk to 40 because of this conversion rate. That's your job, Steve. Our job is to tell you
to give us the data.
That volume got cut in half. Now use that input to figure out what your activities need to be.
But hey, so we use it. And I got to tell you, Clayton, that's what I love about what you're doing with HousingWire is there's got to, like, you're leading with the information that the 50,000 foot view people are looking at, like we're looking at and saying, okay, this guides my direction over the next 3, 6, 9 months. How does it relate now practically and tactically to the originator so that they don't feel like they've got to exit an industry when there really is a lot of opportunity? Just got to know where to go.
I don't ever want to be everything to everybody. I want to help the strongest housing professionals move markets forward. And I think that's more awesome than ever important in this market because this is a true flight to quality scenario. I'm relatively young, like I'm 37, but I've been through a couple cycles. I went through the great housing crisis. I was at Citi in 2007 through 2010. I think if anything that built me up to be like the type of entrepreneur and type of leader that knows what it takes to like navigate a down cycle and grow through it. And I look at the loan originators, whether they're in seats of production or origination leadership, and there's a very clear mindset shift between people who have been through cycles successfully and those that haven't. And if I'm going to be everything to everybody, I want to help the people who have entered this industry in the last decade or even the last 3 or 4 years come through with the confidence they need to stay mortgage originators on the other side of the cycle. Because I firmly believe the housing industry, the mortgage and real estate industry is the linchpin of the US housing economy. And if all of the originators and all of the processors and all of the underwriters that were in this industry over the last 2 years that enabled millions of families to refi into record low rates weren't there, our economy would be worse off. And there'd be millions of families who'd be stuck in higher interest rates because we couldn't handle the volume. So even though right now we're dealing with the repercussions of overstaffing or having more bandwidth than necessary for today's origination volume, I am still like kudos to everybody who came into this industry and killed it over the last years to serve American families through like this huge refi opportunity. So I want to see the strong succeed. I want to see the folks in this industry who give it their all continue through to the other side. And if we can arm them with information and we can arm them with community through our HW Plus product and community and through events like HousingWire Annual, then I think we're giving back to a group of professionals that we want to see thrive.
Dude, I love it. Hey, I'm grinning ear to ear because I forget how much I have missed our conversations. I love the intellect and the dude. You're one of the smartest guys, man. I will tell you this. I'm going to steal some.
My wife doesn't agree. No, I'm kidding.
Hey, well, no, none of ours do. Like, but I love your flight to quality, man. You're going to start seeing that and be like, and Clayton Collins says flight to quality. I mean, you've got some great phrasing and man, I just love it. So, okay. Hey, and I am just such a big fan. So tell people how to get more connected with you. And that would really be at housingwire.com. And I'm sure most of our listeners already know who you are. But let's talk about your event. I want to take the next 10 minutes. Let's talk about the event. You've got Housing Wire annual. Every year you do an event. And I've got several friends that have been on the stage. As a matter of fact, I was looking at your banner and Jake Failing's in there. And I'm like, look at that boy. I'm going to have to send him a pic. He's in there. But we got great friends so it's all things housing, October 3rd and the 5th. And our listeners know I won't be there because we've got our 2-day boot camp on the 6th and 7th in Clearwater. So if you're not going to the 2-day boot camp, go to Housing Wire. It's going to be a great event in Scottsdale, Arizona, focused on content community commerce. Headliner is Ryan Serhant. So talk about that. Talk about the event. How do people get connected to it? And then how do they engage with Housing Wire so that they can get the information they need to be making? I love it. The horizontal and the tactical, which is the day-to-day moves in their business.
So on that flight to quality message, that ties into why the theme is all things housing. So we also own Real Trends, which has been covering news and rankings of top real estate agents and brokerages for 35 years. And we host an event for the C-suite of the biggest real estate brokers in the country each year. In last few years, it's been in the Broadmoor in Colorado, called the Gathering of Eagles.
I love the Broadmoor. Amazing hotel, the best hotel.
Yeah.
I mean, oh my God, love it. When
It's
you say Broadmoor, you had me at Broadmoor.
Yeah, it's very nice. I want to do family vacations there every year. So we know this is the event there. What we hear from all the top brokerages is they talk to their team leaders and their agents, who are important referral sources for the mortgage side of the house. They are focusing their referrals on their highest performing and highest certainty of closed loan originators. Nobody is taking a flyer on a new originator because they sent Starbucks to the office. These are agents are focusing in on their lending partners who get deals done and deliver service and value to their clients. And what we've focused on with Housing Wire Annual is helping connect all the different corners of the housing ecosystem. We don't believe that the housing world is as siloed as it has operated in the past. We don't believe that there should be title professionals should only go to an event for title. We don't believe that appraisers should be off here in this corner in a ballroom in Vegas. We don't believe that originators should just be hanging out. That originators and brokers and agents should be over here in a different corner. We are trying to bring together the parties that enable a more efficient housing transaction. And that means that appraisers, title companies, mortgage professionals, and brokers and agents need to come together at some point each year and understand the challenges, opportunities, innovations, and priorities that each other have. So the all things housing theme, and what we seek to do through our content strategy at Housing Wire and at Housing Wire Annual, is help build a better connected and more efficient housing ecosystem. So what we see in our attendee list for Housing Wire Annual, and Steve, we're new in the event game. Like we did the event you mentioned with Jake, that was our Engage marketing event. That was pre-COVID. During COVID, we launched Housing Wire Annual. We did year one in 2020 virtual. Last year was our first time doing it in person. This is our second time doing it in person. So we're new in this event game, but it is a phenomenal and exhilarating experience for us, who we have this digital relationship with millions of housing professionals, but we don't get to see in person very often. And we get to take that digital relationship and bring it to a great venue. This year, we're at the Princess Hotel in the Fairmont Princess in Scottsdale. And we not only get to interact with our audience, but our audience gets to interact with each other and meet like-minded professionals who value information, value data, and want to build a stronger, more efficient housing economy. And they know this is a work year. It's hard to get away from your desk and go to all these industry events. It's hard to fly across the country, whether you're going to Clearwater or Scottsdale. But if you believe that you are building toward the horizon, like that 5, 10, 20 year view we talked about, then this is time well spent. And it's time well spent for me as an operator to help bring people together. I'm pumped about just getting the chance to be together with this audience of professionals that mortgage and real estate is an entrepreneurial industry. Like, you might work for a big independent mortgage bank, but you're an entrepreneur in the division you run, or the office you run, or the origination team that you run. And I get so much energy out of the entrepreneurial vibe we get from all the professionals that attend Housing Wire Annual. So this will be a fun year. Ryan Serhant Sirlining. No, he is headlining. this is our second time having Ryan. He spoke for us in 2018, so 5 years ago. Since then, he's left a large real estate brokerage, and launched his own brokerage and gone into a lot of related businesses and media strategies. Like, there's a lot to learn from Ryan. We also have Tom Ferry on the stage interviewing Gino Blafari from Home Services. They have a really unique relationship, so that'll be really cool. We have Renee Rodriguez and like so many other independent mortgage bank executives and real estate brokerage executives and tech executives that are bringing their unique insights. It'll be powerful. I'm excited.
Man, I'm super pumped for you. Hey, and I'm going to throw this out there. If you ever need a moderator, I mean, look, a phone call, I'm there as long as it doesn't conflict with our event. So just tuck that away. I'd love to help any way I can. So
I am slacking Brenna right now, our event organizer. Everyone hearing that, Brenna's the person. Steve has volunteered for 2023. On it.
The answer is yes. And then tell me what I've committed to, because I love what you're doing. I love how very genuinely, Clayton, when we met several years ago, there's been a genuineness to it. And I love the mission. I love the passion. Everything you're saying right now resonates with the importance of a connector. And that's what you are. And I love the flight to quality. Hey, and even I just love everything about it. So the answer is yes. Tell me what I'm doing and I'll be happy to be a part. Hey, so do this. I want to know more about HousingWire Annual. Where do I go? And then give us some closing thoughts. So
yeah, you can find HousingWire Annual right on the homepage of HousingWire.com, or you can go specifically to HousingWireAnnual.com. Should be an easy one to find. Closing thoughts is, folks.
Hey, and hold on, I got to say it because I was laughing. HousingWire Annual is Clayton he told me that earlier, and we were giggling because loan officers sell. Most of them don't spell. So Annual is ANNUAL. So HousingWireAnnual.com, or just go to HousingWire.com.
Man, you're making me even rethink the spelling. I think we got it right.
Okay, so closing thoughts, man. What are you thinking?
Closing thoughts. Hey, this is a tough market, but it's wrought for opportunity for the focus who have their eye on the horizon. As a business operator, you can expect me to lead new initiatives, potentially do some M&A, and invest back into the audience and clients that make us successful. And all I can ask is that the people who follow HousingWire and Real Trends and this podcast, that they invest their time and energy into the knowledge and strategy that helps you be better when the mortgage interest rate environment turns around and we see volume heading back in the right direction.
Yeah. Well, Clayton, thank you, man. Thank you for your friendship. Thank you for your leadership in the industry, and genuinely being a thought leader, thinking about the horizon, and then coming back and saying, what does it take on a daily and tactical basis to help the people we're serving go further, faster? And you're a great source of content, a great source of leadership. I count you as a friend, and just want to say from the podcast, thank you for what you're doing for this industry.
Thank you.
Hey guys, I want to just encourage you, do a couple of things for me. Make sure that you subscribe to the podcast. Make sure that you're share this episode with 2 other loan officers today that you feel like need to hear what Clayton has unpacked in this last 25 minutes. It's a great message. I absolutely love it. Share it with somebody who needs to hear it in this business, in this industry. And the last thing I'd ask, give us a review. Tell us how this podcast is helping you in your journey and how we're helping to have a positive impact in your life. And remember this, everyone, anything worth doing is worth doing badly. Just get started. See ya.